The following podcast was recorded on Thursday, March 3rd, 2022, featuring Sam Rines of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Sam Rines of Arbor Data Science. Welcome, Sam.
Hey, good to be here.
Today, Sam's going to discuss the future consequences of the Russian invasion of Ukraine and where spillovers are likely to occur. So, Sam, let's start off today talking about food costs. Besides oil and energy, what is the impact on food supplies and food costs, particularly in those developing and emerging countries?
Yeah, and this is one of the pieces that I feel like is being really overlooked in, you can call it the aftermath of the invasion of the Ukraine. What's getting all the attention is oil at $110 a barrel, and where are we going to replace all the Russian barrels? Are we going to have a deal with Iran to begin to bring on, call it 1.5 million, 2 million barrels, maybe some oil in storage? That seems to be getting all the headlines, et cetera. But what's really intriguing is just how important Ukraine is to the actual supply chain of food globally. If you look at wheat, it's not a major producer of wheat. When you look at, I think it's 3% of the global production of wheat, but it's 12% of global exports. I mean, it is massive in terms of how much it has to export to other countries. And for instance, Egypt is probably the most reliant on Russia and Ukraine for their wheat imports as a percent of total, right? I mean, the two of them dominate. I mean, Romania, which is right next to Ukraine and the United States, those are some pretty big numbers. And when you think back to what happened during the Arab Spring, a lot of that was due to food costs. A lot of it was due to rising food costs. People didn't really like that they couldn't afford food. They rioted. That's a big call it risk, knock-on effect of the invasion of Ukraine, is that you're not going to have the global food supply that you had in 2020 or 2021. I mean, yeah, those years were, a global pandemic, but 2022, you're looking at the potential for food shortages, particularly in North Africa and the emerging world, that are heavily reliant on imports of foodstuffs.
We talk next about the economic pain from these sanctions that are being placed. They're just beginning to take effect with the Russian economy. It's beginning to show signs of distress, but what's the global impact?
The global impact is it's going to be felt for a long time. You have the two things that I think I've stressed the most on this podcast in particular is that gasoline and groceries are incredibly important to the consumer, and they eat up a lot of the expenditures, right? So when you begin to have both food and energy costs rising dramatically, that's going to have a knock-on effect for the U.S. consumer, but also the global consumer at this point, right? You're going to shrink down how much that consumer has to spend on other things. That's the first effect. And call it, kind of the most obvious. The secondary effect is how do you replace and how do you begin to pivot? One, if you're Russia, I mean, Russia, everything in green on this chart is, it's called 50% of Russian exports. That's not happening anymore. I mean, that is a zero on the left side there. And then you get to Asia, and then you can start knocking off basically everyone except for India, the United Arab Emirates, and China. I mean, and even China's not doing as much trade with them at this point. US none, or very, very little. And it has yet to be seen whether or not how much Egypt's going to be able to do, or Brazil's going to be able to do. And going back to kind of the thought process around Russian and Ukrainian wheat, it's worth remembering that you can't pay dollars for that stuff anymore, right? We knocked Russia off SWIFT. So even if those wheat supplies, sunflower oil supplies, corn supplies are available, it's going to be pretty difficult to get around the sanctions to pay for it. So I think the next story is really one, Russia's economy is going into a tailspin. It will be there for a long time. It's not like, if they end hostilities tomorrow, we're just going to pull off all of the sanctions that we put on there. The sanctions are going to be on for a very long time. I mean, this is not a 1 or 2 month type deal. This is probably years to come. So it's beginning to think about, how do you replace those supply chains? How do you replace the wheat? How do you replace the corn? How do you replace the sunflower oil, et cetera? How do you begin to move in that direction? And if you're the Russian economy, it's, how do we survive at this point? There's no other way to put it. I mean, when you get cut off from Apple Pay and Google Pay, and then have 3-hour lines just to ride a metro, it's not something that people are going to put up with for very long. So I think it's going to be a story of, how do you begin to see the disentanglement of the West from Russia, and even more so, how do you disentangle Russia from the global economy and do it quickly? Because that's apparently what's happening. But one key point is, they're also not going to be able to import technology whatsoever. Yeah, they still have some trade with China potentially, but again, China's not a major exporter of semiconductors or anything that can actually make high-tech stuff. So you're also forcing Russia back into, call it, a mild Stone Age.
And to what extent do you think this will extend the already in place supply chain crisis?
That's a tough one, mostly because it's going to be difficult to pull apart what Russia caused, what Ukraine caused, versus what was already there. It's going to cause pain on the food front. That's food and energy front. Those are going to become larger issues because of the invasion and because of the sanctions following. It's an interesting question from the perspective of, we're shutting off an entire economy. I mean, it's not a big one. It's like the size of Texas, and I think it's a little smaller. I mean, Russia's not that big of an economy to begin with. But you are cutting off an entire country from exports, right? So in a way, you would think that it could almost help some supply chain issues, because you're just not sending stuff there anymore. So you have more goods to send to Germany, or to France, or to the United States, Mexico, Canada, et cetera. So I think there's almost it's a big negative on food and energy, but it could be a potential slight positive for freeing up more goods to send to, call it, the good guys.
So Sam, in summary today, what should we watch for next?
Whew. It will be, yeah, what next? Who knows?
It's a good question, because I don't think we really know.
It's a good question, because I don't think we know. I would say, for me, what I'm watching very, very closely is how quickly the sanctions begin to bite. That, I think, is going to be very important. Watching China's stance. China has actually been less Russia friendly than I think a lot of people anticipated. And also watching the Mexico and India front. I think those are two very important pieces to the puzzle. India's been pretty shaky on whether or not they're going to back the U.S. entirely, and so has Mexico. And that I think was a surprising one. That's also not getting a lot of headlines. And we do a lot of trade with Mexico. Mexico is very important to our supply chain. So it's one of those critical aspects that I think we need to watch very closely on both of those fronts. The other one is whether or not you actually have a planting season in Ukraine. If you don't have a planting season in Ukraine, then it's time to begin looking at developing countries that are highly reliant on food imports to feed their populations, because that's the unintended consequence of this. It's going to be pushing those food costs up very, very high, if you can even find it. I think that's going to be the number one thing is going to just really closely watch whether or not you actually get anything in the ground in Ukraine. Because if you don't, it's going to be a North African issue. It's going to trickle into potentially the Middle East, et cetera. So paying close attention there. And this last chart of the cost of different food commodities year to date, I think it's interesting that we had seen wheat go higher on the potential of some sort of action in Ukraine. And when we thought that there was a de-escalation, you had a pretty significant, call it pullback. Now it is just on an absolute tear, and it's continuing to move higher today.
Well, Sam, thanks for joining us today. We appreciate your thoughts and insights, and thank you to our audience for joining as well. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our two most prominent offerings are Bianco Research and Arbor Data Science. For any questions or further information, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day.